today I'll be presenting key takeaways from the earnings call of Wise. So the earnings are for the third quarter of 2022 and the call happened during January 2022. All right. So Wise is also a payments processing company, just like PayPal, Paytm or Google Pay. And they are listed on the London Stock Exchange. And so it is actually quite recent listing. So they were listed, I think, only in July 2021. Okay. And this picture that you see on this slide right now is from their presentation, which shows what factors does the company compete on. Okay. And this is very similar to what other payments companies also are doing today. So they compete primarily on 4 factors. So one is price, second one is speed, third one is convenience, and the fourth one is transparency. Okay. So price and speed, we have already been talking about it. Price, especially when you're dealing with cross-border transactions for different currency corridors and so on, the price has to be very, very competitive so that you have an edge over the other players in the market. And speed, of course, I've got a few more details on speed in subsequent slides. Okay. And convenience, ease of use, user experience, we have been talking about these points as well. And transparency, building trust and advocacy. So one part of this is how transparent is the pricing mechanism of that particular company, how safely is the data being stored, how ethically is the data being used, and so on. So this is so all these come under the transparency bucket. These are the factors that Wise competes on. So how does Wise differentiate itself from its competitors? So when we say price and speed as the 2 primary components, let's see how Wise differs from traditional banks. Okay. So if you see, look at the first point here, the amount of fees charged by Wise is 0.62% of the transaction fee on average. Okay. And you can just compare this to a traditional bank where they charge 3 to 7% on an average. Okay. And here you see they have mentioned another point, cheaper with scale. Okay, so this is something like for certain corporate customers or for customers who do transactions in bulk, depending on that customer, they will offer certain custom rates for them. So the larger the scale of the transactions, the cheaper the transactions get. Okay, and it is also very fast. So 40% of the transactions happen instantly. Okay, just like the UPI that we have in India. Okay, 58% of the transactions have happened or have been completed within 1 hour. 86% of the transactions have been completed within 1 day. Okay, but if you do a traditional bank-to-bank wire transfer, it takes up to 2 to 5 business days. And it also is more convenient and user-friendly. It has a lot of features for people as well as for business customers. And so this is also not the case with traditional banks, because for anything you have to contact the customer support team of that bank for any issue resolution or to get any other details on anything like that. But here they have an app which puts all the features at the fingertips of the user. And there are also no hidden fees when it comes to Wise, but banks have a lot of hidden fees involved. So that's what they mentioned here. With only 4% of bank respondents identifying the true cost. Okay, so the remaining banks, the fee structure is not very transparent. Okay. So now we come to the key metrics of the last quarter. So quarter on quarter, if you see, that is Q2 versus Q3 of FY 2022. Their cross-border volume grew by 15%. That is the volume of transactions, the gross dollar volume, which we talk about. And the revenue grew by 13%. And we can just contrast this with the revenue growth of the other companies which we have been talking about in the previous sessions. So this was 30% for MasterCard, 24% for Visa, 18% for PayPal. So Wise, if you see, is like at the bottom of that list with a growth rate of 13%. Okay, and their GDV for the last quarter was 20.6 billion pounds. Again, so since their listed in the London Stock Exchange, they publish these numbers not as dollars but as pounds. And 32% of this GDV came from individual customers. The rest came from business customers. Okay. And this GDV that you see is the result of a 38% growth year on year. Okay. And the average GDV per business customer is around 22,000 pounds. Okay. And this has also seen a growth of 13% year on year. Okay. And where is this GDV coming from? It is according to them, it is balanced. So there is not one particular geography which is responsible for a huge contribution to the GDV. It is quite balanced across all of their main markets, that is the UK, Europe, and the United States. And their revenue in the last quarter was 150 million pounds. And so this was a growth of 34% compared to the past year. And they expect a growth of 30% this year. So, any questions until now? Let me move on. So I have a few other metrics as well. I'm talking about their customer base. It increased by 26% compared to the last year and 11% compared to the last quarter. And they currently have a little over 4 million active customers. So this is the personal customers and not the business customers. And active business accounts, if you see, it increased by 39% year on year and 10% over the last quarter. Now, clearly we can see that though there are a lot of personal customers, business customers contribute to the bulk of the GDV, and business customers is what is growing the fastest. So you can just contrast the 26% increase in the personal segment growth versus the 39% increase in the business segment growth. So business is where they're getting the bulk of their business from, and this is where the growth is also higher. And their gross margin is expected to grow at 65 to 67%. And now this is primarily because they have decreased their prices. They have been decreasing their prices, and from what they're saying in that call, it seems it is likely this price decrease is likely to continue in the near term as well. So that is why they have made this projection that their gross margin is expected to grow, because once I have one more point related to this. So they wish to decrease their prices initially in the first half of the year and grow their volumes, and then increase the prices at the later half of the year. This is one strategy that they intend to follow. And just a little more on the price point. So you can see from the first quarter of financial year 2020 to the second quarter of financial year 2022, you can see that the price has been fluctuating initially, but then after FY21 they have been steadily decreasing. So 0.72 in the second quarter of FY 2021 came to 0.69 and 0.67, and second quarter of FY 22 it was at 0.62, and in the third quarter it further was brought down to 0.6. Okay, so 0.6% as in 0.6% of the transaction value is what Wise charges as the transaction processing fee to the customer. Okay, and they expect that it is this price which will give them a competitive advantage over a 10-year horizon. Okay, and this was the point that I was talking about. So if they generate high gross margins the first half of the year, they will drop prices in the second half, so that by the end of the year they still achieve their gross margin target. So this is the strategy that they intend to follow when it comes to price. Any questions until now?
One quick question. What was their gross margin in the last couple of years, and what was their net margin?
So those details I was not able to get. So in the call they mentioned that their half-yearly earnings is those results they will publish in June, and that is when all of the details will be comprehensively published, it seems.
Okay, got it. Okay.
Because I think in the call that I went through, and in the latest PDF that they have on their site, these were the metrics that I was able to get.
Got it. Okay.
Next, let me move on. So other points on the strategy. So they have also launched a card, what they call as the Wise card, in Malaysia, Canada, and Brazil in the last quarter. And so this is very similar to a debit card or a credit card, but rather, so typically the debit card will be linked to your bank account, right? But here the Wise card will be linked to the Wise account. So you download the Wise app and then you sign up on the platform. So this card will be linked to that account. So just look at the places where they have launched their card. So Malaysia and Brazil, Canada and Brazil, right? And when we were discussing about Visa and MasterCard, we can remember that they were also making expansions and forming partnerships with companies in the developing economies. Okay, and Wise launching a card in Brazil also fits that same kind of a strategy, because the developed markets today are mostly saturated, and the payments industry players are looking to expand their business in the developing economies. And the launch of these cards, so they expect that it will drive more usage and result in increased volumes. And they're also looking to facilitate easy sending of money to China. So China has a payments platform called as Alipay. So this is from Alibaba. This is also very similar to Paytm or PayPal or even Wise. So Wise has formed a partnership with this Alipay so that users are able to make those transactions faster. So right now it is like only 8 currencies can be sent to China, and if it is sent to an Alipay user, then it will be sent much faster. But they are working on this partnership so that the number of currencies that can be sent to China, that list keeps increasing in the future. And especially in the Western market, and even more so in the United States, this is very important because a large portion of the US manufacturing and other businesses are outsourced to companies in China, right? So that's the reason they have formed this kind of partnership, so that the US-based customers or any European customers who have done outsourcing to China will be able to make those payments easily, and that will be like one USP of Wise compared to its competitors. And they also plan to continue increasing their marketing spend, and this is in spite of the fact that 2/3, almost 66% of the customers right now for Wise come via word of mouth. So they do not come via an advertisement or any particular promotional campaign or anything, but 2/3 of the customers come via word of mouth. So someone else has used Wise, and they would have spoken about Wise to their friends or their customers or business partners or something, and that is how those people also join the Wise platform. This is how most of the customer acquisition is done today. But still, in spite of that, Wise is planning to increase its marketing spend and invest in promotional campaigns. Again, they have not revealed the details of how much they are planning to invest and so on, but this is what they intend to do. And one other thing what they had mentioned in the call was that the customer wallet balances, they are investing in low yield government bonds. So this is like another source of revenue for them. So you put your money in that Wise wallet, right, or the wallet of any other payments app, for example, today. So what the company does is, I'm not sure whether all companies do that, but Wise is one company that does this. So they invest this in low yield government bonds. Okay? So the government bonds are also called as treasury bonds. And why do they invest in these government bonds? Is because it is like the safest form of investment, because it gives a guaranteed return. The government is like the safest place you can invest in. So the yield is low, but still it will generate an income, but no matter how small the income is, they still consider it as an important revenue stream. And it is not Wise's money that is being invested, right? So it is basically the customer's money. So that is why they have opted for this safe form of investment. But this is one other strategy that they follow. Any questions until now?
In government bonds, there's always some locking period. So how does Wise take care of the fund that is being locked in the fund, government bonds?
I'm not sure of those details, but maybe I will check them and I will get back to you on that.
Sai, on the same topic, so I assume that there won't be any, so all the interest that was earned on this investment in bonds is for Wise itself, right? They don't do any.
Right, yeah. It's basically an additional source of income for them.
Okay.
Because, so the wallet is different from a bank account, right? So you have money
just
in your
checking,
so that does not have an interest. So this is invested in the bond, and the interest that the bond yields that goes to Wise.
Similar note, it's not a question, but an information that I wanted to share. So since we talked about Alipay from Alibaba, in China there's also another major player. So basically only two players are there in the payment industry in China. It's WeChat and Alipay. WeChat is basically from Tencent. It's like WhatsApp, and so Tencent had an app called QQ. That was very popular first. Then using that app, they gathered more customers, and then they came into the gaming industry. Now it's one of the largest gaming companies in China. Then they again released WeChat, and the amount of people who use payments using WeChat is twice the amount of people who use Alipay. And that industry is quite different from the payment industry around the world. They use the chat app to make payments.
I'm not sure if you're aware, but sorry, you were saying something.
I think WhatsApp has also recently integrated this.
Correct. Yeah. But I don't think there's much traction on WhatsApp payment. Right?
Yeah.
I think we also generally don't think of.
Since it is from Facebook, people are very concerned if they can share the details.
Okay, I think that is one thing, but also, frankly, I don't even think of WhatsApp for payments.
Yeah, exactly.
Right, I think for chat, if I have to message someone, I'm thinking, WhatsApp.
Yeah.
Right, specifically, if my call is not going through properly, then I would think, let's call them on WhatsApp. That's also what I'm thinking. But I'm not thinking, let's pay them through WhatsApp.
Yeah.
They've entered too late, actually, in the payments.
Yeah.
I guess users are already very comfortable with the apps that they have been using, and there are a lot of other apps, right? So the incentive to switch from using a Google Pay or a Phone Pay to WhatsApp, I think it is very minimal.
Phone Pay was very surprising to me in the sense that I think for me, actually there are many more people using Phone Pay. So oftentimes they'll just say, how do I pay you? They'll just say Phone Pay. It has become like that for many people.
WhatsApp, there is a WhatsApp businesses now, right? So when that picks up a little more now, then that payment will come in handy, because I've seen a lot of businesses already on WhatsApp. They list their products also there itself. Like furniture businesses, I've seen 2-3 listing chairs and all. So when that picks up, in turn, this payment thing also will pick up.
Yeah, probably. All right. So yeah, that's what I had for today. So if we have no further questions, we can close.
Just a couple of data points. I think swap to your question, right? So these government bonds are also tradable. Okay, so there definitely are some bonds that they say specifically for income tax purposes, right? The ones that we may use. Those have a lock-in period, right? So some infrastructure bonds have like 7 years, etc. So I have not invested in any of them from quite a long time. But in the initial days, for tax purposes, I think only once I did that. But so they're tradable. So that's the main thing. So which means that if you so if you don't want that bond anymore, you can just sell it on the market and then get money, and then you can continue to whatever service your needs. So that is one thing. The other point that I wanted to very quickly make is, I think, just to look at the financials. So, Sai, if you can like to share my screen.
Yeah, just a minute. Stopping my screen share. Yeah.
So I just very quickly Googled, and this is what I found. So their gross profit margin is about 67%. Okay, so this is year over year movement, etc. Okay, so it has sort of gone up. 2020 to 2021, it has gone up by about 5.8 percentage. So this is for the half year ended 30th September. Just wanted to let you know. I think so. This seems to be. I think it's in fact going up, right? So this is a half year ended, as in this is probably their H1. Yeah, there you go. It's their H1. So which means that because it has gone up, they expect to drop the price a little bit. So maybe somewhere around 62% is the gross margin. Gross margin means this is before a lot of their expenses are taken off, the sales and marketing, general, and other costs. Because it's the product, they'll have much more, SG&A cost than the direct. What do you call this? COGS, cost of goods sold. Okay. I think some technical terminology. I think some of you may have understood that part, but yeah, I have not seen the net margin here. I could not find it quickly. Yeah, I'm not so sure if it is profit making or loss making. Not very sure about that. Okay, I'll stop sharing the screen here. Any other questions for Sai?
Sai, just one last question, man. So the one main advantage it seems that Wise has over other players or banks is that they're competitive pricing, right? Very low prices. They in fact say that it's 70 to 80% cheaper than the cheapest bank that is available, something like that. But this, I'm just trying to understand how, in order to make transfers from their customers, they have to rely on banks in the back end, right? So how does it mean that they are using banks at a lower cost because these banks additionally charge these people for transfers? Or are they did they make a deal so that their charges are low? I'm just trying to understand what could be
Right.
What achieved those low prices?
So all of these transactions which Wise does on a day-to-day basis will be facilitated and processed only by the banks, right? But since these transactions happen on a large scale, so they will have some kind of an agreement with the bank stating, for every X number of transactions I do, this is the rate that you will charge me. So some kind of an agreement will be in place with each and every bank, and that is how they're able to sustain their business. So see, all of these business, right, the platform-based businesses for that matter, work on. So the volumes are what sustain those businesses. So they have huge volumes, and by way of those huge volumes, they are able to form these agreements, which will, help them operate at sustainable costs.
Got it. Okay. So the more they scale up, the more cheaper they can provide.
Exactly.
Okay.
So even one of the slides that I was showing, so they had mentioned, it gets cheaper with scale.
Yeah.